right, everyone, here we are with ticker symbol Nndm, Nano Dimensions. And before we jump into this chart, I want to say welcome to all my first-time viewers and investors. Welcome to my channel, Invest for Tomorrow. To all my subscribers, welcome back, and let's jump into this chart. So yesterday I had stated that this was the run that we saw. Obviously before that, there was a run as well, but this is where it actually took off, and we were getting really close to this support level here of $3.45. And if it broke through that and stayed below it, this would start to see newer lows. I had stated how it dipped a little bit after hitting the highs of $6, and this was certainly profit taking. It shot back up, and then it went down to where we were at yesterday, leading to today. And this was a lot of fear and uncertainty, plus a little bit more of profit taking in the process, right? At the beginning of it, and then also probably fear, uncertainty, and cutting losses at this point. Now, I want to remove all these lines and circles. I don't want you guys to get confused, but those are those points that I was seeing based off of what the chart is showing and how it's looking. And then I stated it's gotten quieter, volume is a lot lower, and it was in a nice sideways direction, and it was not that far away from the 50-day moving average. Obviously, the last candlestick of the day for yesterday was right about, I think it was this last one right here. It was this last one right here, and it started the 22nd right here. And the 50-day moving average was somewhere above here. So when you look at it, it was a really small distance for the bulls to actually break through and catch up. And I stated if the bulls came in hefty and strong, they could actually break through the 50-day moving average and build momentum. Well, they took advantage of the fact that if they went sideways, the 50-day moving average was going to catch up to the price and by default bring it back up. And from that point forward, the bulls actually appeared, and we're seeing it here in the last couple of hours. Now, it's going to be important to pay close attention to how this stock reacts in the next coming days and the rest of the week, due to the fact that obviously right now the stock just broke through the 50-day moving average, and in the last couple of hours it's where it shot up. And the question is, could the bulls maintain this momentum without having the bears stop them? So we're going to go ahead, narrow this down, look at it very closely, and see what the charts are showing. So we're going to look at our new resistance level, and we're going to look at our new support. And then I also want to talk about it a little bit broader so that we can see what's important after these points. Obviously, I want to talk about it narrowed and squeezed down to the T as much as possible so that we can have some form of center direction, and then also confirmation if it keeps heading that way in whichever way it goes. Obviously, right now, the bulls broke through the 50-day moving average. They need to maintain themselves above the 50-day moving average. And the 50-day moving average is 382. I'd write that down. Super important number. 382 lets us know on what side of the chart we're in. We're currently in bullish territory. And if we end up below it, we'll be in bearish territory. So for the bulls to continue this momentum that they've created here, being above the 50-day moving average, they need to break through this resistance level. This resistance level is super important for the bulls. They need to break through 444. And if they accomplish that and turn it into a support, they can continue to break away and hit newer highs. Their next point would be up here at the highest point before this dip, and that is 458. Super important number as well. 458, I'd write that down. But before worrying about 458, the bulls have to break through 444, turn that into a support, and start to hit newer highs and newer resistance levels so they can break away from the 50-day moving average in an upward direction. So it's super important for the bulls to break through 444 and hit newer highs, breaking away from the 50-day moving average. Super important. I want to emphasize that because this momentum could be lost fairly quickly if they don't break through this resistance level of 444. Now, on the other hand, we have what the bears are trying to do. If the bears accomplish this, they accomplish two things. They broke through the 50-day moving average of 381, which is super important, It lets us know, like I stated, on what side of the chart we're in. And they broke through the first support level and the lowest point before the bulls actually crossed the 50-day moving average and had this run. So super important to keep in mind that if the bears accomplish this, they've done those two things. They broke through the first support in bearish territory, and they've accomplished breaking through the 50-day moving average, getting them into bearish territory. So our support level is 378. If that gets crossed, then your next point would be here at 362. I'd write that down. That's the lowest point after this recovery and leveling off sideways. 362 is another support to keep in mind. I wouldn't worry about 362 right away. I would pay very close attention to how the stock is reacting and behaving at 378, and how quickly is it hitting newer lows between 362 and 378. You want to see the behavior of the stock and also see if the bears are dominating the chart, or are the bulls having a chance to come back up and bring it back over to bullish territory, because the tug of war is going to be interesting. Just like we saw here, the tug of war between the bulls and the bears is the same thing that I would pay very close attention to if it breaks through the 50-day moving average, and if it breaks through this support level, which is 378, because it's still fairly close to the 50-day moving average, giving a chance for the bulls to reappear and cross back over it and end up back in bullish territory. So it's going to be very interesting. Pay very close attention to those cues. I hope that with those cues, you guys are well prepared for tomorrow's trading day. And as always, if you found this video helpful and informative, please do so and subscribe. Don't forget to click on the bell to turn on all notifications and not miss a single video that I post. Share this with your friends and community. And don't forget to hit that like button to let me know you watched this video. At the end of this video, there's going to be a pop-up video. I talk about the S&P 500 index and how it's been rising several points in specific dates. On those specific dates, the Federal Reserve is pumping the markets, making the S&P 500 index rise. I show it in the charts, I show it in the dates, it's all in the video. But just to summarize it, if the S&P 500 index is rising, then there's individual ticker symbols rising up with it. And they're rising anywhere from 30 cents to $3 per share. I know it may not sound like a lot per share, but it does add up. Like I always say, profits are profits. And it's something that I really want to share with every investor and viewer, so that everyone is equipped and prepared for these dates. They don't guarantee you profits, but they are there to maximize profits and minimize losses. I'm not there to tell you to buy, sell, or hold anything. I'm just here to enlighten everyone that whether the market's going up or it's going down, for as long as the Federal Reserve continues to pump the markets, there's an opportunity to maximize profits. Thank you guys so much for watching, and let's make some money.